Income tax in Jamaica has historically been a central pillar of government revenue. The system is progressive. Individuals pay no tax on income up to a certain threshold, 25% on middle-range income, and 30% on higher income. For decades, this structure has provided the government with a steady stream of revenue while attempting to distribute the tax burden according to income levels. The tax-free threshold ensures that lower-income workers are not overly burdened, while higher earners contribute more proportionally. Recent changes have significantly altered how much of that income is taxed. As of April 1, 2025, the tax-free threshold for personal income increased to approximately 1.7 million Jamaican dollars annually. This is a substantial rise from previous levels and means that many individuals who previously paid tax on smaller portions of their income now pay nothing at all. The impact is immediate. Workers see higher take-home pay, and households have more disposable income to allocate toward consumption, savings, or investment. The threshold is scheduled to rise further. By April 2026, the tax-free threshold is projected to reach around $1.9 million, and by 2027, it is expected to exceed $2 million annually. This gradual increase ensures that inflation and wage growth are considered, allowing more people to remain within the non-taxable bracket over time. The effect on households is clear. Individuals who earn near the previous threshold now pay zero tax, increasing disposable income for lower and middle-income households. For those above the threshold, the first $1.8 to $2 million of income is now untaxed, which reduces the overall effective tax rate they face. The statutory tax rates themselves remain unchanged. Income above the tax-free threshold is subject to 25% for the next portion of income, and income above $6 million annually is taxed at 30%. This structure ensures that high earners continue to contribute proportionally, but the majority of workers experience a significant reduction in their taxable income. This combination of higher thresholds and progressive rates provides both relief to lower earners and continued revenue generation from higher income individuals. Economically, the immediate effect of raising the tax-free threshold is to increase household disposable income. This extra money can be spent or saved, and each choice has implications for the economy. When households spend the additional funds, it stimulates consumption, benefiting businesses and increasing demand for goods and services. This can lead to short-term growth as retail sales, service demand, and employment expand to meet consumer needs. For households that choose to save, the increase in disposable income can strengthen financial stability, increase household wealth, and provide capital for future investment, either through personal ventures or financial markets. These threshold increases also have broader implications for income inequality and poverty reduction. By raising the non-taxable threshold, the government ensures that the lowest earners retain a larger proportion of their income. This can reduce relative poverty levels and increase economic mobility. Households previously burdened by taxes now have a stronger ability to afford basic needs, invest in education, or support small-scale entrepreneurship, which contributes to long-term economic resilience. From a fiscal perspective, the reduction in income tax revenue must be considered. When thresholds are raised and effective rates for many workers fall, the government collects less indirect income tax. This loss of revenue requires adjustments elsewhere to maintain fiscal balance. In Jamaica's case, one of the mechanisms to offset the reduction in income tax revenue is through a greater reliance on indirect taxes, such as the general consumption tax. Indirect taxes applied to goods and services purchased by households and businesses, capturing revenue from consumption rather than directly from wages. The shift from income-based to consumption-based taxation has several economic effects. Consumption taxes are less visible than income taxes, and their impact is distributed across all consumers regardless of income. This can increase the cost of goods and services, which may offset some of the disposable income gains from lower income tax. Additionally, consumption taxes can disproportionately affect lower-income households, which spend a higher proportion of their income on necessities. Economically, this raises questions about equity and efficiency in the tax system. While households have more take-home pay, they may face higher costs in their daily expenses, potentially neutralizing some of the intended relief. The interplay between income tax cuts and consumption taxes also affects government planning and public services. Reduced income tax revenue limits the funds available for direct public spending. Governments must carefully manage these changes to ensure that essential services such as education, healthcare, infrastructure, and security continue without compromise. Economically, this requires a careful balancing act, cutting income tax to increase disposable income while maintaining sufficient revenue through alternative channels to fund public needs. For the labor market, reducing income tax has further implications. Higher disposable income can influence labor supply decisions. Workers may feel more motivated to enter or remain in the formal labor market as the rewards of employment increase. Similarly, reduced taxation may encourage higher productivity as individuals retain more of the benefits of their work. For high-income earners, the unchanged rates above the thresholds ensure that incentives remain aligned with productivity and contribution to government revenue. Business and investment behavior is also influenced by income tax changes. Increased household disposable income can stimulate demand for products and services, which benefits businesses across the economy. Companies may experience higher revenues, encouraging expansion and investment. At the same time, a more favorable income tax environment can attract talent and entrepreneurship, as individuals have a higher effective return on their labor and capital. Economically, these effects support growth and can enhance the overall dynamism of the Jamaican economy. Looking further ahead, the gradual increase of tax-free thresholds points toward a broader structural shift in Jamaica's economy. If income tax liability continues to decline as a proportion of household income, the economy may rely more on consumption and other indirect taxes to maintain government revenue. This could create a more balanced mix of taxation sources, reducing dependence on wage-based taxes while maintaining revenue streams stable. Economically, a diversified tax base can enhance resilience and reduce vulnerability to fluctuations in employment or wages. Comparatively, Jamaica's approach can be contrasted with other Caribbean economies. Some countries in the region have very low or even zero income tax, relying heavily on indirect taxes, natural resource revenues, or tourism-related fees. Economically, Jamaica's gradual threshold increases and potential rate reductions reflect a cautious approach that balances the need to support households with the need to maintain fiscal stability. Eliminating income tax entirely would require significant shifts in other revenue sources to ensure the government's obligations can still be met. Economically, the challenge is to ensure that short-term gains in household income translate into sustainable growth without undermining fiscal stability. The reduction of income tax also interacts with inflation and purchasing power. As households retain more income, demand for goods and services may increase. If supply does not keep pace with demand, this can generate upward pressure on prices. Economically, this creates a need for careful monetary and fiscal coordination to manage inflationary effects while preserving the benefits of higher disposable income. At the same time, households with increased income have more flexibility to manage price increases, reducing vulnerability to moderate inflation. From a long-term perspective, reducing income tax liability encourages investment in human capital. Households with more disposable income can invest in education, training, and skills development, which improves productivity and economic competitiveness. Businesses benefit from a more skilled labor force, which can enhance innovation, efficiency, and overall growth. These economic effects are difficult to quantify in the short term, but have significant implications for Jamaica's long-term development trajectory.